Great to be here. Nice to meet you, everyone. And yeah, I'm Timo from Swarm, so let me get right into it. We started Swarm in 2019. The original idea actually came up when Philip and I, my co-founder, lived in Silicon Valley, and we decided to build this infrastructure for basically building like DeFi applications that supports real-world assets. And today I'll be focusing on basically how to do OTC trades predominantly for real-world assets, but really for any crypto asset, because the problems are in many cases overlapping. So I'm going to dive into that. As a company, we're headquartered in Berlin. We have a team across London, Berlin, Czech Republic, Ukraine, and so yeah, we're kind of a distributed setup. And yeah, we're about 14 people at this point in time. So DOTC. So how do you do an OTC trade? Obvious issue is you need to be able to trust the counterparty. So the different market structures that we were looking at, like that already existed pre-blockchain, were the bilateral OTC market, which is effectively person meets another person. We want to trade something. How do we do that when, number one, we don't know each other? Number two, maybe we, in this case, would have to trust each other. And if we can't trust each other, well, then we have to meet to make sure that the transaction happens. So a lot of people try to solve this problem by, I think the first one that came up in the blockchain space was when Nick Spanos was trying to do this at a venue in New York. Basically have a bunch of people show up in a shop to trade Bitcoin for US dollar. So he did that, he got shut down for obvious reasons, and then things kind of moved on. But the problem with that is obviously that the trust aspect of doing an OTC trade is almost insurmountable unless you have a mechanism to cater for it. And so then you have the second solution, which is then kind of the dealer intermediated OTC, or you go to an OTC desk or a market maker to basically say, hey, I want to buy $500,000 worth of Bitcoin. And they say, okay, fine, we'll give you a price X during 30 seconds, go. And then you need to basically decide if you want to do that or not. And that's typically, like those timeframes are common when you have something called like eOTC, which is provided by some of the market makers as well as some of the custodial companies out there. If you have a more manual process, you would basically have an email process saying, hey, I want to buy $500,000 worth of BTC. They send you an email back. You have this price until 3 p.m. UTC. Fine, I'll take it. And then the deal goes off, sometimes off fiat rails as well. So you kind of have to wait for the money to end up in the bank before you know that the transaction has concluded. So it's a very kind of, like in the non-eOTC or non-crypto situation, it's actually a very nerve-wracking thing where you kind of, unless you're like institutional, it's pretty nerve-wracking just sitting there waiting for your, $500,000 or whatever you did in terms of transaction size to arrive in your bank account. And then the exchange markets, I don't know if you've seen, but like a lot of the big exchanges have OTC markets as well. So they basically say, okay, you can buy off the order book, you can buy directly from us. For example, Binance has an OTC service, which they basically ask you to have, I think they want to keep like $250,000 in your trading account. Only then can you start chatting with an OTC agent and start doing trades on that platform. And then, of course, on the other side of that, it's going to be whatever price that they offer. They have a lot of liquidity, so maybe the price is good. But in the end, it's kind of a convoluted process altogether. But still, having said all of that with the potential, like with the actual issues on the OTC side of things, it is volume-wise, it is one of the bigger ways to transact. It's actually much higher volume than spot on exchanges. So OTC in crypto as well as across traditional financial asset classes is a big deal. So the risks, again, like if you really think about what's going on there, the counterparty risk is huge, right? So the thing you need to overcome is just that you need to know that the other person is going to fulfill on their commitment. So how do you do that? If you're in a situation where you want to sell a bunch of tokens to someone for ETH, who's going to send the first transaction? I might send you, 1 ETH worth of tokens, you return it back and say, okay, now we kind of establish some level of trust. But in the end, this chain can basically break at any point. So it's, it's something that is kind of unsolved in some ways. And then, and then basically there's like a pricing problem as well. So if you're dealing with an OTC desk or a centralized counterparty, you can almost like compare that to dark pools in traditional finance, or just like a centralized OTC in crypto, where you don't really know if you're getting a good deal or not. What is the spread that they're charging compared to market price? And if I went on a deeply liquid order book, what would my average price be for that block trade on there? So it's kind of hard to know if you're getting a good deal or not. You just like, if you like the number, you click and buy, which is not ideal. So we built something called DOTC. It's basically a decentralized application with a UI. Everything sits on permissionless infrastructure. We deployed it, both the UI and the domain is on .eth, obviously. Smart contracts are on Ethereum, Polygon, and Base. And with the idea that, to me, this is like almost one of the most obvious use cases for blockchain. I mean, obviously, number one, just transferring value across the globe instantly and in a kind of a seamless way, just by sending stables or ETH or Bitcoin. That was like the first, obvious use case. But I think the second use case is to exchange value with each other and do that through an atomic transaction so that we don't have to, meet in person, or we don't have to trust a intermediary or a third party. We can just kind of go ahead and do the transaction ourselves. So it's an open infrastructure. Anyone can just go and use it. As mentioned, EVM-based. And what happens is I basically put in an offer for whatever asset I want to offer up, or I put up like a buy order. I'm offering, $500,000 USDC for X number of, token. And then I'm basically waiting to see if somebody else wants to take that other side of the order. Or I think the more kind of useful use case is really when we agree on Telegram, email, or otherwise that we're going to do a transaction, and then we basically say, okay, let's agree on even on down to price and how the transaction is going to happen. We agree on all of that, and then instead of starting to try to do that transaction like manually, we just like put up a block on the OTC, and then the other party basically just takes the other side of that trade. And then we have an atomic transaction that both parties can basically trust. And the buyer in this case will see that the asset that they're buying has been already deposited into a smart contract, so they know that it's there. So once they put in the USDC, it swaps. So this takes care of, like, I don't know, I suppose there's a lot of people here that are building crypto projects, and I'm sure you're getting all these emails of people that want to buy your token. Hey, I'm representing this family office. They have 200 Bitcoin to invest in DeFi. We are very interested in buying your token. Whenever we get these shitty emails, we basically just say, okay, great. Just let us know what block size you're buying. We'll put up an OTC order on the OTC, and you can go and take out the other side. And obviously, they never do. But anyway, that's a different story. Then the other stuff that we did was we built support for partial orders. So, sometimes if you want to sell like a large volume of something, you might want to offer that at a particular price. But if you're only selling a smaller volume, then you want a different price. So you basically want to be able to dictate whether the order should be taken out fully as a block trade, or if it should be like a partial order. So we allow for partial orders, or we allow you to enforce that if you're going to buy at this price, you have to buy the full block. So it's basically like, just a way to manage different deal structures. And then we have the private offer, which is a way to say, I will only offer this to a particular wallet. And that's quite useful when you've agreed with someone that you're going to do a deal, but you don't want somebody else to come and take out the deal, and front run somebody else. So it solves the whole front running issue. And you basically just go there and say, okay, give me your wallet address that you want to do this transaction from. And so when I put in my sell-side order, I'm going to dictate and say, you can only do this transaction with this particular wallet. So all the other transaction attempts will fail, including all front-running and whatever types of bots that you would have out there. And then, of course, the time expiration, this is valid for X amount of time. It's just like another useful feature. So yes, I think, in terms of like thinking about like how OTC should work on blockchain, I think we gave that some thought and we came up with a solution. I think it's been working really well for us. And then, so now we started also like adding a couple of very RWA specific items to that as well. Because like, if you're trading crypto, a lot of that is like pretty straightforward, just from a kind of a regulatory and otherwise point of view. But then when you're trading RWAs, you need a couple more things to make that feasible at like professional or institutional level. And so one of the things is what we call auth select, which is basically, so when we built the permission layer for Swarm, we built a way to put basically NFTs into your wallet that would say, I have the following qualification levels. So it's basically a soul-bound NFT that once you've qualified for something, we put that into your wallet, and that allows you to interact with our smart contracts, and that allows you to basically perform those transactions. So that function we've also built into DOTC, which means that you can now use basically a requirement for the buyer to say, hey, I'm going to sell this asset to you, but only if you're not from North Korea or the US or some other place. So you can basically start introducing restrictions on requirements on the counterparty if it's more of like an open offer. So it's like, I can offer this to anyone as long as they're not XYZ. So that's something we call auth select. And the other thing is dynamic pricing. So basically, instead of just having like a fixed price block trade, you can start introducing things like, because a lot of the RWAs obviously are priced somewhere else in a different market. So the way we deal with that is like for some of our products like Tokenized, Tesla, Microsoft, MicroStrategy, Apple, we have all the big public stocks on chain. You can basically say, I want to sell this at market plus 5% over a weekend, or you can start like doing dynamic pricing into something that's related to an Oracle feed in terms of the price of the deal itself. And just on that as well, we provide something that's called best price. So when you put in your OTC offer, we have reference points that are Oracle driven that basically give you, what is the best price out there. And I often found, like many times when I was doing OTC through, I guess a few years ago, through Copper's infrastructure, that they were offering up some deal, and then I would have to go like to a couple of different pricing sources to see if that deal was actually a good deal or not. But then the deal was only valid for 30 seconds, so it becomes like a tricky thing to kind of figure out quickly enough. So that, I think that best price, actually knowing like, if I do this now, where does that sit in the market? Is it super attractive, or am I underpricing? What am I doing? That's another key feature for creating orders. And then communications is the other part where I think also on RWAs, I think some of the aspects of RWAs are like obviously not natively available on chain. So you'd have to have a lot of like metadata related to RWA. So then you can start talking not only about deal structure, but also about like, if I'm buying tokenized gold, where does the gold sit? Can I move the gold? Is there an NFT representing the gold bar, or is it more like a commoditized gold token that I'm buying? So stuff like that. So communications is needed, especially if you think about like the fully decentralized peer-to-peer model where I don't even know who you are. Like we're doing a deal, but like I don't actually have to know who you are. It's just like we're doing the deal and you're fulfilling some of the criteria that I have to do the deal. And then we can just communicate, even anonymously, and then just get a transaction done. Discoverability, we're also like providing these like search functions and stuff for what assets are out there in terms of OTC offers. And then the affiliate participation is something we thought about where, so basically if you have like, a lot of projects have like a single asset that they're providing. And so what we built there is like an ability for them to create individual OTC offers on their website for their particular asset. So they basically become, like a user of DOTC, but only for that particular asset. So it doesn't really become a market, but it just like solves the actual problem of selling that asset, to a counterparty without ending up with this whole back and forth like, oh, hey, where are you? Can you send a transaction first? And, should we do this through an escrow or what have you? So none of that is needed anymore. So I think that's one of the core things here. And then, so really using decentralized, transparent applications based on smart contracts is really the obvious way to do OTC. It's like if you think about transactions on the internet, I was buying and selling a lot of things on eBay when I lived in the US, and it was always the issue, like I was into mountain biking, I was buying, like you're building all these expensive things. You never know if the other guy is going to send the thing. So then they started, and that's why they bought PayPal basically, to fix the escrow problem. So like, how do I know that you're going to send the thing? Well, how do I know that you're going to pay for the thing? And then so this was like the back and forth that was always going on. So I think blockchain solves all of that. It's like the only no-brainer way to do these transactions, really. And then, of course, it solves a lot of the issues that are, that I already mentioned on the traditional OTC side, as well as the OTC through centralized exchanges. So, the whole like information asymmetry that's common in OTC markets. Is this really a good deal? Is it not a good deal? And, you can basically, it just enhances like transparency when you can see all the deals that are available out there. And the counterparty risk is, I think that's the main one, obviously, because like it's just like the whole issue of fulfilling on the deal. So how do I know that's going to happen? Especially if it's a fiat transaction, that was always an issue. You just sit there and wait for the money to arrive, and there's always like, oh, we sent the money, and then it's like, oh, but it hasn't arrived. And then I've done that so many times. It's just, it's a horrific situation. Sometimes you're dealing with client funds, and the stuff hasn't arrived, and then it's just like, it's not a good situation. So I think that's something that, that was like a big problem. And then on the liquidity side, especially in relation to RWAs, there I think we have like, so a lot of the RWAs are not like, you don't find obviously deep Uniswap pools or other pools with deep liquidity for a lot of the RWAs. Maybe with the exception of, well, the obvious most kind of liquid RWA is stablecoins. But even for gold, like, there's some liquidity out there. But as you go like towards more and more unusual assets, even for our tokenized Tesla, Apple, MicroStrategy, and all the other stuff that we put on chain, it takes time to build up liquidity in AMM pools or even order books to make that like a feasible trading situation. So there, the OTC protocol is actually super useful because we can basically say, somebody can come in and say, which is regularly happening on Swarm, it's like, hey, I want to buy, 50,000 worth of Coinbase on chain. And then so we just go back to the TradFi market, fulfill that order, and feed through the tokenized Coinbase stocks, and then they receive them. So this is a way for us to basically also receive interest from the market, and then we just go and execute that in the institutional brokerage. And the way that happens is we buy the stocks, buy the Coinbase stocks. They sit in through an entity which is an insolvency protected company in Germany. So the token holder has the legal rights to the underlying shares. So even if we disappear or go bankrupt, they still have legal rights to the underlying stock. So that's like, there's always like a one-to-one match. This is not a synthetic model that we're doing. So I think that's really important as well. But really coming back to that whole liquidity issue, it's like those assets don't have that much liquidity. And if you take a tokenized fund, for example, that's not also going to be potentially a low liquidity, high value transaction scenario. So somebody wants to buy in $1 million into a Pantera fund, or let's say $500,000 or $250,000 into a Pantera fund. It's not a market that's going to be very liquid, but for the buyer, that transaction size is obviously significant, and then there needs to be somebody to provide that, on the other side. So that's not going to be like a highly liquid Uniswap or Binance market, but it's actually going to be a one-off transaction, high value, but it still needs to be served somehow. And I think we can serve those orders well through DOTC. So I think, there's just like a bunch of stuff that, are just like beneficial here. Like I said, like the direct market access that anyone can go and use this infrastructure, we think is a big deal. Because it really solves like one of the things where, when you're trying to do, especially like on a global scale, you're trying to do a number of things, then you have all these issues with geographical proximity and otherwise, and this really solves it. So And I think maybe one comment on the regulatory compliance side as well. It's just like the way we think about that is like we started by building an open infrastructure that is completely permissionless and open for any type of transaction. And then we allow for people to start introducing layers of compliance/requirements in terms of what they want to see from the buyer seller on the other side. So any requirements that they might have on geographical level, AML level, chain analysis level, other types of qualifications, we build that into the protocol so that in the end, we can replace a lot of the infrastructure that's centralized with fully decentralized solutions. Even though, having said that, the actual issuance of that NFT saying that I am from here and I'm allowed to buy this thing, that's a centralized activity, generating that NFT. But once it's there, the buyer or seller on the other side can trust that, okay, now he or she has that NFT, I can go ahead and do the deal. Yeah, so that's on compliance. Yeah, that's what I was going to go through. And anything you want to, check out, or I think the easiest way to access dotc.eth, if you don't have like Brave or something like that, if you just want to use a normal browser, you can basically go to dotc.eth.link, because that's going to take you through to the application as well. And this is something that is, obviously live and kicking today. So we're on Base, Polygon, Ethereum, as mentioned, and you can just go there and check it out. Do a transaction, do something small, just kind of see how it works, and then join the community, give us feedback, tell us if something sucks. Thank you. Any questions about that at all? All right, thanks, guys.
Wait,
oh, we have one here.
Hello, thank you for your talk. Can you tell us, can you dive into a little bit more detail what types, what categories of RWAs are now trading on your Swarm marketplace, and is it lively? What is the activity like? What is the volumes like?
Yeah, so the assets that we have today are the kind of what we regarded as the top tech stocks. So we did, Apple, Tesla, Microsoft, MicroStrategy, Coinbase, Coupang, NVIDIA. And that was part of a community vote. So those were the first things. And the reason why we did that was just because people know what those assets are. And we're also able to sell them to retail through a prospectus that we have in Liechtenstein. So it's basically a combination of what are the products that we can offer to a retail audience, because we thought that was an important aspect, which is different from Ondo. Ondo is more focused on institutional buyers, and they have a very high bar for qualifying purchasers. And for us, it was important to be able to offer retail directly. And then we have a couple of treasury bonds, like US treasury bonds, but that's like a non-differentiated offering because there's a ton of that already on chain, so I don't think that's a big deal. But it's quite useful sometimes for certain use cases. And then, we'll start, later this month, we'll start on some commodities as well, so that's coming. And I know that some of that's been done before, but there's new regulation coming in Europe where you have asset reference tokens, and they need to be implemented in a particular way to be compliant in Europe, so we're doing that. And I think, I mean, volumes are still, pretty low. If you look at the total TVL on Swarm right now on the website, it's like 10 million plus, or I don't know exactly what the number is. Actually, I haven't looked the last couple of weeks. I've been busy. but yeah, so I think it's somewhat early days. And also, sometimes when I look at some of our peers in the market and some of their volumes, I think that, it's like 5 wallets holding 100 mil. So it's pretty obvious what's going on there. So.
One more question.
Hi. So in order for us to tokenize the RWAs, we have to mimic the real-world operations that happen as well. So I'm referring here to tokenizing. Can you hear me? Yeah? Okay, sorry. So I'm referring here to tokenized shares because as long as you do own a share, you get the governing rights as well within the company, and also there are dividends down the way. So is going on and off. So how is Swarm resolving that?
Yeah, so I think starting on the dividend side, that's the easier one because the institutional brokerage account where the stocks are held, that's the account that receives the dividends also from TradFi. So once we receive that, we just convert that to USDC, and then we look at like which wallets are token holders for that particular asset, and then we make that dividend claimable through a smart contract. So then you go to, it's a similar way that you claim rewards on Swarm as a liquidity provider. You just go there and then basically the UI is going to tell you, you now have this many SMT in the rewards case to claim, and with the stocks, it's basically you now have this much USDC to claim as part of a dividend payout. So that, I think dividends are pretty straightforward because it basically just like convert from fiat to crypto stablecoin, and then you provide that on a smart contract. Governance, much more tricky. So governance, it's basically a situation where at different tiers of shareholding, you have different rights, and then also would have to like basically do a collective voting process and basically act as a proxy. So our issuing company in Germany called SwarmX GmbH would then have to be, because that's the formal shareholder in a register of the TradFi company. So SwarmX would have to basically act as a proxy voter for all the token holders. So if the token holders don't agree on how to vote, we'd also have to, manage that situation. So I think that's a much more complicated situation. But we've done a bunch of DAO votes in the past, so I think we have the mechanics to do it. But I don't think the primary reason why people today, at least, buy tokenized stocks is to get access to governance. Because if your primary reason to buy stocks is to get access to governance, you should go to TradFi. For tokenized stocks, I think the primary reason should be, you typically would want to borrow against it. You want to activate the asset. You want to create some yield around it. And that's the most common reason why people would buy tokenized stocks. Yeah?
Anyone else?
Some guy over there in the corner.
Hi, thanks for the talk. I wanted to ask, you mostly deal with stocks you described. What about other types of RWAs as well as like real estate or, mostly real estate?
Okay. Yeah, I don't know if, I've been in this like what was originally called security token space since 2017, and they tokenized the ski resort in Aspen, 6 years ago. It's a real estate use case. Real estate has always been like this no-brainer use case in some ways because it's quite expensive to buy a whole property and get access to all the rental incomes and so on. But I think like there still seems to be some hurdles there in terms of, I really have to understand what the property is and what it's yielding and who's managing it and how is that happening. It's like there's a lot of questions around individual real estate assets when you tokenize them. And I haven't seen like that the market has really solved those questions yet, at least not for retail buyers. So it's like, I think it's a huge opportunity. It's just like it takes some time to unfold, like what is the right way to do it? Is it like through a property management company, or what is the best way to do it? I think the whole like tokenization of your own house is not generally a very good idea because that's like creates a lot of complications as well. So I think in real estate, there's a lot of things that still need to unfold in terms of making that market scale. But I'm sure that in certain categories like commercial or certain types of properties that people understand really well, like maybe residential with a very clear rental income structure, if somebody puts out a token for that and they basically start distributing the rental income on a continuous basis, that's something I can trust because then if I buy a fraction of that, I'm seeing that, the tick is happening and I'm kind of, understanding that this is actually working, then I think that market can take off. So we have, I don't know how many real estate tokenization companies we've talked to since 2017 when we really started with like looking at this space. But none of them actually have come to us with a clear enough offer to, for us. And also from a regulatory standpoint, that offering is a little bit more complicated than, like the public stocks. The great thing about those, all the risk disclosures and all the other things that are complex about offering something to retail have already been disclosed when they IPO'd. So it's like all the risks are known, and those assets are much easier to tokenize. So that's really the main reason why real estate hasn't taken off. But as mentioned, we are doing commodities. So we haven't announced that yet, but there's like, one very obvious commodity that we're definitely doing. It's coming, in a couple of weeks. And then from that, we're going to build out more commodities because we think that's something we can offer as well, that people are taking an increasing interest in, as they become more like savvy around macroeconomics and stuff like that. So. All right, we're good. It's lunchtime. Thank you.